a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi, everyone. Welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Nasdaq option income ETFs that aim to provide both growth and high income. Now, we know that option ETFs, option income ETFs, have been hugely popular this year. Income-hungry investors have been piling into these ETFs that use options to deliver those juicy dividends, and we have seen a surge in these launches also. So, in addition to offering high yields, these strategies also lower portfolio volatility a little bit. But remember that there is no free lunch in investing. So these products, they tend to work best when markets are sideways. They underperform during strong bull runs, but they do provide some protection when stocks fall. And that is why 2022, which was a terrible year for markets, during that year, these option income ETFs, including JEPI and JEPQ, they did quite well. And that is why since then they have become very, very popular. So remember when these call strategies, they cap your upside because when the stock falls, option expires worthless and the manager will pocket premium. When the stock surges, option is exercised, gains are capped. So that is why you are giving your upside, a part of your upside in return for that income stream. So a few months ago, I made a video about JEPI and similar ETFs that track the S&P 500 index. And since then, I have received quite a few questions from readers about this ETF, JEPQ, and other similar ETFs that provide exposure to the Nasdaq 100 index while also using options to generate income. Now, this ETF has become more popular than JEPI because investors want exposure to those high growth technology stocks, the Max 7 and other tech stocks. And this ETF has taken in 8 billion this year, whereas JEPI has taken in a little over 4 billion. And this is just a little over 3 years old, and it now has 28 billion in assets. So let's take a look at this ETF and other ETFs that provide exposure to the Nasdaq 100 index, but use slightly different strategies in their option overlay as well as the underlying equity exposure. So the performance is very, very different. So let's talk about the ETFs. Talking about JEPQ. So let's go to the quote page on Zacks.com. You can read our research report, articles, and then using the link, you can go to JP Morgan webpage for this particular ETF. So what this ETF does, it provides exposure to the to a portfolio which mirrors the Nasdaq 100 index, and that it uses, according to Portfolio Manager, this portfolio is built using a unique data science-driven investment approach to select stocks. But basically, the portfolio will be somewhat similar to the Nasdaq 100 index, but they aim to generate a portfolio which has more favorable risk and reward characteristics. And then to generate additional income, they write call options. And instead of directly selling call options, they use equity linked notes. In fact, and these are structured financial products, but their returns would be tied to the performance of the Nasdaq 100 index call options. So you will see that this is the portfolio currently about 100, a little over 100 holdings, and NVIDIA is the top holding, Microsoft, Apple, Amazon, and other those high growth technology stocks. And this has an expense ratio of 35 basis points. In fact, it is the cheapest of the three that I'm highlighting today, and a 30-day SEC yield of more than 11%. Now, the second ETF that I'm highlighting is by NEOS. This has also been quite popular. This now has 3.4 billion in assets, of which 2.6 billion has come this year itself. So this also provides exposure to the stocks in the Nasdaq 100 index and uses call option. So according to the managers, this ETF also focuses on tax efficiency. So the ticker symbol is QQQI. This is the most expensive of the 368 basis points expense ratio. And again, you can go to the quote page on Zacks.com, and using the link, you can go to QQQI's web page, and you can learn more about this ETF. And as the managers state here, that it also seeks to take advantage of tax loss harvesting opportunities, in addition to using these index options, which are subject to lower 60-40 tax rates. So I'm not a tax expert, so I'm not going to spend a lot of time on the tax efficiency, but in general, that is why probably this ETF has been quite popular. But if you look at the holdings, you will see similar holdings again: NVIDIA, Microsoft, Apple, and Broadcom, because it is the same Nasdaq 100 portfolio. So the third ETF that I'm highlighting is actually the newest and the smallest also, but I'm highlighting it because this has delivered the best performance. And in fact, the other ETF, S&P 500 ETF, in option income ETF by Amplify DVO, had also done very well, and it had outperformed the JEIP ETF. And I noticed that QDVO, which is the sister fund to DVO, has also done very well. So this focuses on large cap dividend growth stocks and writes covered calls on individual stocks, has about 143 million in assets, of which 125 million have come this year itself, and charges 55 basis points. To learn more, again, you can go to the quote page, and using the link, you can go to Amplify's webpage for this ETF. And as I mentioned, this uses growth-oriented stocks and then targets high monthly income also. And it creates a portfolio of large cap dividend growth stocks. This has a more concentrated portfolio. It has 47 holdings currently. And if you look at the holdings, you will see that the weights are slightly different because the portfolio is more concentrated. So NVIDIA is almost 12% of the portfolio. That may be the reason why this has done so well. And in general, it selects stocks which have historically strong earnings and cash flow characteristics. Now, there are some other ETFs too, and I'm not going to spend a lot of time in those. There's one by Goldman Sachs, JEIP, and this one by Global X QYLD. And if you want to learn more about those ETFs, you can go to their web pages. Now, on the next slide, I have the comparative performance. And as I mentioned, the Amplify product has done really well. So this shows performance since Amplify products QDVO's inception in August last year. And the Amplify product has returned about 25% since then. The Nasdaq 100 index is up about 20%. The NEOS product is up about 19%. The S&P 500 index is up about 16% since then. JEPQ has returned 15%, and Global X product is the significant underperformer that is up just about 6% since August of 2024. Now, on the next slide, I looked at the performance of JEPQ versus JEPI and the Invesco 100 ETF, the Qs and the S&P 500 index, because I wanted to highlight that over the longer term, these option products, they do underperform the broad indexes. So this chart is a little over 3 years old. So during this time, the Qs, the Nasdaq 100 index, has surged about 76%. JEPQ has delivered performance which is similar to the S&P 500 index's performance, both up about 55%, whereas JEPI is up about 29% during this period. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.